Okay, so sometimes I think I would make a good radio host. I think some of my segments would fit right in on radio. I would make a horrible radio host on this one right here because it's taken me a long time to cover this. So we heard it from the equity blog. Their main goal is equity, regardless of what you have to do to get it. And this one is from what we'll mildly call the opposing viewpoint. The CRA, Community Reinvestment Act, Scam and Its Defenders is the title of this um, blog entry on uh, Mises Institute, the Mises blog. Liberal economists, in quotation marks, are overjoyed by the bursting of the housing bubble, for it provides them with what they believe is another market failure story. Most analysts see the subprime crisis as a market failure, Robert Gordon gleefully declared in the April 7 online edition of The American Prospect. And the guy kind of bashes on Gordon a little bit, which is funny. He says he doesn't define what an analyst is, but it's probably just a bunch of his friends. And he posits these main 3 points. Runaway greed, aka market failure, on the part of lenders is the cause of the subprime crisis. These same greedy lenders routinely ignore billions of dollars in potential profits in lower income communities because of their systemic racism, stupidity, or both. Hence the need for the CRA. And thirdly, no government agency, especially not the Fed, had anything to do with either the creation or the bursting of the housing market bubble and the subprime crisis. And he links to Gordon's article if we don't believe what he's telling us about what Gordon posits. The first 2 propositions, as I pointed out in my videos, are contradictory. You cannot have runaway greed leading to this market failure, and also have these same people that we know are greedy. You want us to believe that they're ignoring all these potential profits in lower income communities because of racism. Either they're profit seekers or they're racist, because they can't be both, because racism eliminates profits. Okay, so you can't have us believe both. You want us to believe that they're greedy, and you want us to believe that they're not giving loans to minorities out of racism. But racism eliminates profits. So if they're all about profits, they can't be about racism. The 2 of them cannot be true. Gordon, the author here, writes that Gordon has taken on a few analysts, including the author himself and Professor Stan Leibowitz. He says that he and Leibowitz have argued that the housing bubble has caused the chickens to come home to roost, so to speak, after 30 years of government policy pressuring banks to make tens of billions in dollars in bad loans to people with low or non-existent credit ratings. Neither one of us have said that every last bad loan out there is a CRA loan, but Gordon implies that we do feel that way. Gordon cites Fed bureaucrat Janet Yellen, the girl we heard from San Francisco in the last article, a killer statistic that absolves the government of all guilt. Independent mortgage companies, which were not covered by the CRA, made more high-priced loans to borrowers with bad credit than did CRA-regulated banks. Here we come to addressing the claim made in the previous article. Yes, we heard that. It says, so what? Even if Yellen is correct, that does not mean that CRA-regulated loans have not caused tens of billions of dollars in defaults. Moreover, Yellen, the girl from the Fed, and Gordon don't seem to understand what an independent mortgage company is. Many of these companies are like the one, they are middlemen who arrange mortgage loans for borrowers, including some private borrowers, with banks, including CRA-regulated banks. So some killer statistic, he says. That's right, these mortgage companies are nothing more than brokers. They hook up buyers of mortgages with sellers of mortgages. That is, borrowers and lenders. They put the 2 together, take a fee, and that's it. The banks are still CRA-regulated banks. By ignoring the role of the Fed in creating the whole housing market mess, Gordon's pronouncement that it is entirely a result of market failure is laughable. In other words, leaving out such a great portion of the cause of this makes the argument totally discredited. He also denies that CRA lending has anything to do with why so many uncreditworthy borrowers have defaulted now that the Fed-generated housing bubble has burst. This is also an untenable position. The CRA was created during the Carter administration. Uh, Under the CRA, if a bank wants to make virtually any change in business operations, merging, opening up a new branch, getting into a new line of business, it must first prove to the regulators that it's made enough loans to the government's preferred borrowers. Tax-funded community groups like Acorn can file petitions with regulators that stop the bank's activities in their tracks, perhaps defeating them altogether. The banks routinely buy off Acorn and other community groups by giving them millions of dollars, as well as promising to make even more dubious loans. See, these Acorn groups, like the group that wrote the previous blog, they can stop the banks if they haven't loaned enough to the customers that they prefer. These guys that know nothing about banking can tell the bank how to run their own business. Now, and this is not going to get any banks in trouble. This is not going to force any banks to make any mortgages or loans to people that they normally wouldn't make it to. Baloney. When this type of provision is in uh, a law, of course, the people that know nothing about banking, that haven't risked their own money in opening up a bank, that are not loaning their own money, that have no knowledge of banking and how it works, when they're telling the bankers how to bank, of course they're going to make the bankers make loans that are going to go bad. Freddie Mac pioneered the securitization of bundles of these high-risk loans so they could be sold on secondary markets. Such securitization exploded during the 90s as a result of government regulation, as Ben Bernanke, Fed chairman, stated in March 2007 on a speech published online. Securitization of affordable housing loans expanded, as did the secondary market for these loans, in part reflecting a 92 law that required the government-sponsored enterprises, Fannie Mae and Freddie Mac, to devote a large percentage of their activities to meeting affordable housing goals. This is government-mandated lending to affordable housing goals. This other act, in '94, loosened up regulatory barriers to bank mergers. Consequently, Bernanke says, as public scrutiny of bank merger and acquisition activity escalated, advocacy groups increasingly used the public comment process to protest bank applications on CRA grounds. In other words, there was a burst of additional legalized extortion perpetrated by the Fed and its pet activist organizations beginning in the mid-90s. This is exactly what I'm talking about. When you have a provision in the law that allows organizations to direct banks, and here it is. This is Bernanke himself, the Fed chairman, saying this. As a result, Bernanke says, banks began to devote more resources to their CRA programs. Forced increased investment of CRA lending. Why doesn't the other blog believe it? Here's it comes from the Fed. They're the one that wants to quote the Fed and give all these statistics. This is coming from the Fed himself. Thus, banks began to devote more resources to their CRA programs. In '95, the U.S. Treasury created the multi-billion-dollar Community Development Financial Institutions to provide banks with access, in other words, taxpayer dollars, to new opportunities to finance community and economic development as encouraged by the CRA, said the Fed chairman. The government also streamlined the regulatory requirements for CRA loans in '95, allowing and indeed pressuring banks to make such loans without the benefit of many traditional creditworthiness criteria, such as the size of the mortgage payment related to income, savings history, and even income verification itself. Instead, the Fed told banks that participation in a credit counseling program, many of which are federally funded, could be used as quote-unquote proof of a low-income applicant's ability to make his mortgage payment. So if you're in credit counseling, that suffices for ability to make mortgage payments. In other words, the federal bank regulators required banks to make bad loans based on non-existent credit standards. We're going to do more on this.